Hello, followers of the 4-year journey. This is Bob Lucas here on June the 15th, 2021. 2.5 years since the original video, and here we stand today, just shy of $40,000 and around 10 times higher than where we were during the first video. That is really exciting for me, very encouraging that we're sitting on a 10x gain. And that's the half glass full kind of view of this bull market. We're 10x up. We're at 40,000. 2 years ago, if you had told me we'd be at 40,000, that was the expectation. But just realizing that position today is exciting, and it's a great place to be. I don't look at it from a 50% decline. We had a pretty surprising, to some extent, 50% decline more recently. But we also had a 40-50% decline with the March capitulation. We had this uptrend here that blew everyone away in terms of its strength and its relentless move here, a 6x move over just 4 or 5 months. We had something very similar to begin the 4-year cycle. If you recall, very few people were on board on this so early coming out of a bear market. People were still really in shock from the 12-month 85% decline bear market. So the point is that really, and some of this is hindsight, of course, but when you look at the way this 4-year cycle has behaved, it has been difficult for most people to get on board and to stay positioned and to be sitting today in a 10x profitable position because of the extreme volatility that we've seen on both sides and the sort of outlier moves relative to the prior cycles. If you look at the last 4-year cycle, it really was a nice, consistent, and even the size of these bars here just tell us that we didn't have as much of the volatility. We had plenty of 30% declines, of course, but we had a mostly methodical process all the way up to a blow-off top. And a lot of us were kind of just looking at that as a model, and maybe to some extent sort of fixating too much on how this cycle should unfold based on the prior cycle. And the lesson, of course, is that every market is different. Every cycle is different. They do rhyme, of course, but within each cycle, they have the freedom to behave how they choose. But right now, I think a lot of people are panicking. They're looking at this down 50%, and they're worried it's going to go further and it's going to keep going down, or they're worried that the 4-year cycle has possibly topped. And those are legitimate, but I think most of those are coming from a position of fear and not from a more rational view on where this bull market stands. A lot of people ended up not getting the right position early on, or selling at the wrong times, and then buying back when everybody started putting on their laser eyes and talking about super cycles. People started adding more, and I saw plenty of people talk about borrowing money at the $50,000, $60,000 level. And once you lever up at the wrong time and the wrong position, then when a 50% decline comes, you're just not ready to be able to handle a move like that because of just how painful that position becomes to you for getting in at the wrong time. Now, where do I personally stand on this 4-year cycle? I think we're just being shaken out again. I think a lot of people, with now the involvement of larger players, institutional players, a lot more government focus and regulatory focus, which means a lot more news cycles, a lot more attention in general. We're seeing the volatility. The volatility is here to stay, in my opinion. And when I look at this chart, and I keep saying, go back to the monthly, go back to the quarterly, yeah, there's a massive bar there. Yes, it's not common for Bitcoin in a bull market to decline by 50%, but here we are sitting at the 10-month rising moving average. And we're still, in my opinion, early enough in this 4-year cycle, just past the 2-year peak, where I don't see the $60,000 high as a peak for this 4-year cycle. Yes, it got frothy. Yes, sentiment was fairly extreme at one point, but was it a blow-off top? Was this rounded sort of top here a blow-off top, just 3x from the prior 2017 high? I highly doubt that. I do highly doubt that. And if you look at the past bull market, for example, it took around 27 weeks to break out new all-time highs. It took around 21 or 22 this time around. It happened sooner. We got ahead of ourselves sooner, just like we got ahead of ourselves early in the 4-year cycle, and we had to sort of come back and consolidate and flip the pendulum back down. I think the pendulum again swung too far too quickly, and now we have to consolidate those gains. We also had a situation where we had larger institutional players come into the market at the $10,000 range, $15,000 and $20,000 range. And unlike you and I, who have a smaller position, of course, relative, and who see this more from a longer term view, who see this from a life-changing monetary system, institutions don't see it the way you do. There are exceptions, of course. Institutions, the way they want to make their money. And when they get into something that within a quarter or 2 quarters ends up being 5x up on their portfolio, what they're going to do is they're going to liquidate. They're going to sell that position because they've more than met their goals. They want to realize that profit. They want to be able to put that onto their brochures and advertise to their wealth clients that their returns and their funds have far outpaced anything else that's out there. So they want to be able to showcase that. So we just had a situation where we've seen massive distribution after a massive period of accumulation, massive distribution. And it's just going to take some time from here, I believe. We're going to take some time to reaccumulate. Reaccumulation will be needed. And once that reaccumulation phase ends, which may not be until the summer, may not be until the early fall, I think we'll see a resumption of this primary bull trend. And I think the 4-year cycle top is still ahead. The 4-year cycle top may be even further into the 4-year cycle and may not be, as I've originally thought, more towards the end of the year. That, of course, is based on the prior 2 cycles that really topped almost right at the 3-year point. I think this cycle now, based on the way it's behaving here and the expectation I have that some more accumulation will be needed, there's no reason why this cycle may not go until April or so before coming to a peak. Now, some people say, well, what about going down to 20,000, or maybe the bear market peaked? Again, I'll reiterate, I do not think the bear market has peaked, had the bull market has peaked and that a bear market has started. I do not believe that, but can I say that in absolute terms? No, I cannot. I never can. I never have. Because markets can surprise and we just never know in the end. Now, is there a situation where 20,000 can be hit? Yes, there is. And I give it maybe a 10 to 20% possibility at this point that we still have one more of what I call 60-day cycles ahead of us, or 2 more. That is a decline down to the initial breakout point of the peak of the 2017 high. So that is something that we need to be prepared for. I put together a little clip of some prior videos that I've shared where I talk about expectations in general and what the market, what the market could do at any given time, and how we don't want to be in this sort of absolute mindset that really can wreck an investor. So just listen to this little clip and I'll come back. Advantage of this opportunity. Now, does it have to work out this way? It doesn't, right? We could be looking at a double top with 20,000 and then the next 4-year cycle low coming back down to 3,000. That's a possibility. I don't want you to think that the cycle has to play out in this way. I'm only telling you how I believe it's going to play out based on a longer time frame, 16-year asset cycle, and the fact that I believe we're still firmly in a secular bull market for Bitcoin. And under that scenario, this is what I believe is the most likely outcome to play out. And that's why we still have to be aware of the alternative possibilities. We have to be aware that we could indeed be looking at sort of 8 years of sideways chop, right? Where it gets to 20,000, it kind of does something like this. It's possible. And then the next 8 years, you get the point, right? It's more of a sideways chop. That is a possibility, which is why I keep saying when you invest today, you're getting in near the bottom of a 4-year cycle, and that you're investing with money that you can afford, not necessarily to lose. Nobody can afford to lose anything, and nobody wants to lose anything, but you're not betting everything on this, right? You're not going to cause catastrophic harm to you and your family by putting in way too much at this point, because there's no point, there's no need. If we're going for a 30x move from this point, or 100x move from this point, you don't need to be more than, let's just say, 10% of your of your wealth allocated to this, and that's even high. You just don't need to, okay, because we're looking at such massive gains. Not only that, if you're putting in too much capital at this point, if you're looking at the potential here and thinking about owning private islands and a suite of fast cars, what's going to happen is you're not going to be able to ride the big capitulations or the big shakeouts that the market's going to give. And there will be shakeouts, and I'm talking about 20 and 30% corrections in Bitcoin over this period at some point. If not one, at least one, but if not one, at least maybe 2 or 3. And if you're taking in the mindset that I'm going to put everything in right here, then you're not going to be able to hold those gains. You're going to basically give it back. You're going to sell out at some point, and then you're going to be in an undesirable position that you're not going to have. You're not going to be focused on the plan and the 4-year cycle, and you won't have the full position that you need. Okay, right? I mean, when you're looking for the long term, you have to be content with the market in the short term and its gyrations and its ebb and flow. We don't know where it's going to go. Like we didn't know on the way up. I thought, and you look at my previous videos, right? I did talk about a couple of times the possibility that Bitcoin can just go straight up, right? But that wasn't my primary expectation. My expectation was get your position here, and I think it gets caught at some resistance around the 6,400 area, and I thought it would chop around this area in the summer, and not until maybe August start to begin to break out of this 6,500 area and begin its way up over the next 6 months from there towards a $20,000 area. It did this much sooner than I expected. So what I'm outlining right now on the flip side of this is that it may do something that I'm not expecting. We need to be prepared for that. And the reason for that is if we are not prepared for a sharp decline at this point, we are susceptible to dumping all of our position on a massive decline based on the fear that it's all over, or that there's some Elliott wave type analysis out there that's saying Bitcoin's going to go back below 3,000 or something silly like that, or that the U.S. government's going to basically ban Bitcoin and it's all over. Any one of those narratives. Now look, we're in this for the long haul. There are many threats, there are many narratives out there that can be bearish, and that will come along and that will drive price down low on the short term. And we need to be prepared for all of those. We can't take only the good. We can't take only the rallies and then choose to turn a blind eye to the possibility of declines. They will come, and when they come, the mindset needs to be that this is just part of the process. This is part of investing. This is part of investing in a very volatile and essentially new technology and asset class, and there will be massive swings like there was an 85% decline in the bear market. Even in the bull market, you can get 40%, even 45% declines from the top, right, at any given point. But the reality is that this is a highly speculative market. It's driven by pure speculation, and for that reason, we're going to see, and we'll continue to see in the future, these massive moves to the upside and downside. So what's the point then? The point is that as a hodler and somebody looking at the investment from a 3 to 4 year time frame, these intermediate cycles that that rally by up to 100% and decline by 30 and 40% are really part of the journey. And until we embrace and accept the fact that we're going to get these massive swings at certain times, now these are probably as big as you're going to see, of course, but they are still well within a couple of standard deviations of expectation. So we need to be just accepting of this fact and again focus on the longer term perspective and the longer term goal, which is a cycle that is in uptrend, a cycle that over the 4 years is more likely to rally and move in an uptrend fashion for 3 to 4 of those years, with the exception that we're going to see these massive counter trend moves or even corrections and bear markets within a larger 4-year cycle. And if we're not prepared for those types of moves, then essentially what happens is we move from that firm, hollow mindset, and we allow the more recent and intermediate price action to influence our decision making. So our decision making and our intentions are on the longer time frame and the longer goal, but we end up sort of panicking to a large extent on the more intermediate time frame, losing sight of really what the goal is about. I've also said in numerous videos, perhaps maybe in every single video, that nobody ultimately knows where price is heading for Bitcoin or for any asset class. If it was that easy, and if we knew in definitive terms, in absolute terms, then it wouldn't be a question. We would just know. But we don't know. We don't have a crystal ball, and we plan for these events. And we plan for these events by having the right mindset and the right allocation. Knowing full well that along the way up, we're going to see 30% declines. And again, I like to say this, but a 30% decline at the $100,000 level is a $30,000 decline. We may get a situation in the future where we hit 100,000, we decline to 70,000, we get everybody puked their leverage positions, and then we make a run to 200 as an example. That's going to be a possibility. We're going to have to be hyper aware of that. It's not going to be easy. I can guarantee you when you're sitting on $100,000 Bitcoin, it's not easy to hold that in the face of a decline like that. But these are the types of challenges you need to set yourself up for. It's not okay to just dream about how much money you're going to make. You have to dream about how you're going to handle scenarios and situations in the future, because they're going to come. They've already coming. They've been hitting us recently. We got hit with one here. How many of you puked this capitulation in March with coronavirus? How many people thought it was all over? Okay, they happen. Okay, a lot of people missed this big move up here as well. All this happens. It's going to happen again in the future. We need to be prepared for them. And with, for whatever reason, Bitcoin topping out early, like 60, 70, 80,000, and reversing into a bear market for 2 years, and maybe getting out back down towards 20,000 or 25,000, right? That is a possibility that I don't see occurring, but it's always a possibility. And if that were to happen and you still make some money, that's fine. That's just what the market, that's what the market gives you. That's what you take. So hopefully from that clip, you'll appreciate that nobody knows where the markets are going. And if I've given you that impression over the last 2.5 years, then that clip, that series of clips, hopefully will remind you that nobody, including myself, knows exactly where this is going. Do we have strong conviction that Bitcoin is heading much higher? I do, and I think a lot of people do, and for good reason as well. And there are plenty of reasons from a fundamental, from a macro standpoint, from an adoption standpoint, on why Bitcoin is going to succeed and why Bitcoin is going to be worth a lot more than the 1 trillion market cap that it managed to hit recently, and why it could be worth 10 times this amount in the not too far or not too distant future. But nothing is for certain in investing. Nothing ever is for certain in any asset class in investing. And we have to be reasonable in our expectations. So the way we manage that is through our allocation to this sector, by getting in very early and by having predetermined places where you're taking some off a table to reduce that stress of having too much of an open profit, and to manage the overall risk that you face from a portfolio standpoint. We manage that through our allocation to Bitcoin or to this sector. And I know many of the younger folks kind of scoffed at my idea of putting in only 10% early on to this. And everyone's like, you have to go all in, you have to go all in. Well, you know, some of you managed to go all in and have held all the way through, and kudos to you. But you're probably able to do that because you're younger, you don't have as much to risk, and there's more that you want to gain out of that. So if Bitcoin didn't succeed for whatever reason, you'd probably be in a very similar position. For other people who have possibly a higher net worth or have been investing for a decade or 2 decades, who have earned their capital, you just can't go out and risk everything, because you will have so much stress when it comes to managing that position that 50% declines will end up resulting in capitulation or selling at the wrong time or buying at the wrong time and averaging all the way up. So the better strategy has been, of course, to get in as early as possible on this market, and a smaller position early on that's held is going to outperform a much larger position that keeps getting added to as the market gets higher. I've put together another clip from the prior videos that talks about allocation and risk a little clearer, so I won't rehash all that. Let me play you another clip. Simply, we want a position in Bitcoin to take advantage of the 4-year cycle opportunity, to be able to walk away with it significantly financially free, right? But we don't want to approach it with a sense that we're going to get filthy rich. If you start thinking filthy rich, you're actually probably going to end up not making any money, to be honest with you, and potentially even losing money. And that's because it's just difficult to be significantly over leveraged or over positioned to one opportunity and safely and easily ride the ebb and flow nature of a speculative and volatile asset like Bitcoin. It's best to have a reasonable position, a reasonably sized position that you will be able to sleep comfortably at night, not waking up at 4 in the morning to check the price of Bitcoin, or when Bitcoin has a really bad week, for example, that you are emotionally distressed by it, purely because of the amount of leverage and the size of the position that you have is just far too proportionally big for your overall wealth situation in your current lifestyle. So for me personally, the allocation that I want is a maximum of 10% of kind of liquid assets that so for me, I still want to own businesses, and I still want to own real estate. I definitely own stocks, and I definitely want to own gold, and I definitely want to own other assets and other income producing assets. And this for me is just one component of my overall investing and wealth strategy. Okay, so having an allocation of more than 10%, in my opinion, even though the opportunity is so great, is I wouldn't call it reckless, but it's unnecessary. And certainly if it goes beyond 20%, I would call that reckless. 50x. There's no sense, there's no point in doing that. Even with a 10% allocation, if we can realize the goal of this journey, then we're talking about being 300%, 400% up overall on your disposable wealth and income. So that's the perspective I think we need to take into this when looking at such an enormous possibility that lies ahead. Take a more sustainable allocation to this that allows you to see this as just one component of an overall strategy. And but at the same time, right, what's going to be very important is that we have to realize that reward if it gets up that high. So you don't want to be like almost everybody else who doesn't have a strategy. They're going to get in here, they're going to call themselves a hodler, right? And they're going to buy, but they're going to get out at 7,000, they're going to get out at 9,000 or 12,000 or 18. If you're going to do this, right, reduce your allocation to a very manageable size so we can get to the point where if Bitcoin hits 50 and 60,000 and 100,000 and 150,000, that we have the exposure where nobody else or very few are going to be able to have that exposure. So that's the trade-off, and that's the reason why we want a manageable allocation, because we want to be able to, when prices at that point, we want to be able to say, yeah, this is what we planned for. This was at least the goal. It wasn't the prediction, it was just the goal. And we're here now, and we have a plan, and we're going to execute to that plan all the way to the end. And I've talked about many times about position sizing, and position sizing, some people think that in a longer investment thesis that position sizing doesn't matter, but that's not true. Position sizing is absolutely critical on all time frames and in all investment. So another reason why I keep in every single video emphasizing that your position needs to be structured where you can sleep at night and you're not allowing 30 and 40% declines in the market to significantly throw you off your overall thesis and your overall strategy. And that's what's happening to many of you right now. I know it is, because I know from the questions and the emails and the DMs I'm receiving that people are, not all of you, many of you are firm and strong, but many are capitulating and they're selling always at the wrong time. So if your time frame is 3 years out, and you're allowing yourself to be influenced by action over a 2 or 3 month period, then you're essentially going against your thesis, you're going against your process, and you're allowing short-term price to dictate how you trade this. The other question I've been getting a lot of is, did I sell? Am I selling? What am I doing with my Bitcoin? And the answer is simply, I'm not selling a single coin at this point. I didn't get into Bitcoin to get shaken out by a move like this. Certainly not after a 40% decline. Didn't get shaken out, didn't come close to thinking of getting out after a 55% decline over 7 months. Certainly not going to get shaken out of position right here. The reason for me, the reason for getting in early on a 4-year cycle here is precisely to have a strong hand in a market, in the belief that this for me is an investment and not a trade. I trade all the time Bitcoin on the shorter time frames with the goal of increasing my Bitcoin, but from a hodl and from a 4-year journey standpoint, this is an investment. It's an investment I believe in, and for that reason I'm holding onto my Bitcoin, because it is timing, and the question is being patient. Unfortunately, too many people who have bought into Bitcoin see only the one side of that equation. They see only the upside potential, and they are motivated by greed and not through logical thinking. Just like any other investment or allocation of capital that I put to work, for me, it's an investment, and every investment comes with risk. Every investment comes with possibility and potential. And it's with that in mind that I allocate my capital. For me, there really is no place for feelings and emotion when it comes to an investment. When an investment becomes too emotional for you, it means that you've invested far too much, or you've risked far too much, or your expectations are really not grounded in the sense that you understand and appreciate the risks and you understand the potential. All you're pretty much looking at is the potential and what that potential might mean to you from in terms of a life-changing event, and you become blinded to that outcome, or that possible outcome, to the point where it all becomes extremely emotional or stressful for you. So when we encounter moments like this, as we're seeing here, or for example this move here, you pretty much don't know how to handle a situation like that, because again, you're emotionally too invested. So I'm just going to warn you here, when you approach an investment from a position of greed, you end up basically with a position that only allows for one direction or one outcome. And I feel that many of you, not necessarily followers who have been on board from the beginning, but many folks who get into this type of space lack the investment discipline and don't appreciate that an investment has risk. And as a result, they find themselves today in a situation where they will be unwinding, or have already unwinded their position for yet another loss. Here's another risk here. I mean, I've been trading 25 years. I've seen many bull markets. I made a lot of money on some bull markets. I lost it all and gave it back. I made money and lost money on bear markets as well. So I think I've learned a few things about bull markets and bear markets. And I think the number one rule here is that you never lose your position. And too many people fall victim to this. They're in on the plan, they see the long-term potential, but they get cute and they think they can extract even more gains out of a bull market by getting out at certain times and trying to get back in at a lower price. And let me tell you, a bull market can be unforgiving to people who try and time the shorter time frames within a bull market. If you try and time a pullback, you may find that the market gets away from you, and you will then not want to buy back in because you're going to have a higher price because of that, and the market's going to continue and it's going to continue, and you're going to be locked out of the market, and eventually it will pull back, and most likely it'll pull back right when you buy, because that's going to be the peak pain point for you. And what will happen then, the market will reverse on you. It will give you that 30% decline, and again you will be stuck with a higher price point and a bigger position, and again emotionally it's going to be something that is going to really scar you in some ways and affect and impact how you hodl through the rest of the strategy. The goal of this is to have a position that is not so extreme, that is not so large, that is not a position that keeps you up all night and makes you, dream about this and check prices at 2 o'clock in the morning and 6 o'clock in the morning when you wake up. A position that, yes, is obviously meaningful and life-changing and impactful, but at the same time, it's got to be something you can handle. You need to be able to handle the gains, the open profit that you have, so you can get to the point where you can realize that gain and have a life-changing event. As I said before, if you need to take a little off the table on the way up, I took a little bit off at 28,000. Some people said, you're silly. It's going so much higher. Yeah, I know it's going so much higher. That's the whole point. The whole point is that I want to take some off the table, cover my initial investment, so I don't feel as if I need to sell at the wrong time in the future. It's a planned event. So planned events as part of the strategy to getting towards 250 or 300,000 are perfectly fine, because they are on your terms. Every time you make an investment decision on your own terms, you're winning. Anytime you make an investment decision that wasn't planned, that was in response to action, market action at the time, is an event or is an action that is most likely not going to benefit you, that is not on your terms and in your strategy, fitting your plan. And looking back, most of the times that happens, it doesn't serve you well. So the key here is, with the right size relative to your wealth, and with the right frame of mind, with the right expectations, and with confidence in this bull market and this 4-year cycle, you're able to withstand and expect the volatility when it comes, and to see that as just part of the journey up towards the end goal that's always been out there. The volatility is not new for Bitcoin. And what happens is you end up looking at your portfolio from a peak standpoint, from a drawdown standpoint, and then you start to get afraid of losing that open profit because it's too big to handle. I've talked a lot about that. And too big a position ends up meaning that you sell at the wrong times and you buy back more again at a different time. And where you start off with a very good price point on an average, over time, by responding to this extreme volatility in the market, you end up raising that average price significantly. And then what happens in the end is you just don't maximize your gains. By having a reasonable allocation early and then sort of hunkering down and being accepting of volatility and embracing that to a large extent, and also in many chances, in many opportunities, taking advantage of that volatility, we can see and ride our way through. Just like having the right allocation will get you through any scenario, such as one that comes back down and tests the $20,000 breakout. Not my expectation, but again, a possibility. That is something that having a reasonable allocation and the right mindset will allow you to get through. But look, the way I see it now simply is that right now, we are sitting on an initial investment of 100,000 in the model portfolio. So this is just a guide, and everyone uses a ratio. This just outlines how 100,000 invested at that time would have performed without making any real changes to the portfolio, except for a couple of initial buys and a buy at the March 2020 capitulation and a planned sell in December at 28,000. That 100,000 is worth $1.17 million, with hopefully less stress and less headache and less management. So look at the positives. Yes, the market's down 50%, but it was down 50% or more in December of 2020. It was down 60 or so percent in I think it was September 2019. So it's done this before. That's been the character of this 4-year cycle. Again, we don't know if this market has topped. It could have topped. Again, always a possibility. But with the right allocation and the right mindset, we can weather that, we can get through that, and we can see how we want to approach a situation like that in the worst case scenario down the road. But right now, focus on the fact that I do not believe that this 4-year cycle has topped, that we may need to consolidate some more. We may need to see some lower prices. But overall, I believe that this bull market uptrend will continue, that it will resume. It's just a matter of when, not if. And for that reason, having a reasonable allocation to this market will give you the exposure that you need and will end up being a life-changing event as a result. Thanks again for being here. I hope you've enjoyed this video. All the best and take care.